we are going to discuss some MTQs from the company law portion. In the previous session, we have already uh, done some practice on the contract law area. So let's get started with it. The first question at hand is Flop Limited was in financial difficulties. In January, in order to raise capital, it issued 10,000 £1 shares to Gus. That would be the nominal value, but only asked him to pay 75 per share at the time of issue. Now, this key phrase is important. I'll tell you in a while why. In June, the company realized that it needed even more money, and in order to persuade Gus to provide it, Flop Limited told him that if he bought a further 10,000 share, he would only have to pay a total of 40 pence for each share. Now, the comparison is that in the first case, they are only taking the amount, a partial amount at the time of issuance. This means that later on they can ask for 25 pence whenever they want. But in the other scenario, this word he would only have to pay means that they are selling the shares at lesser price than its nominal value, and he will not have to pay, which is not permitted in law. The concept is called discounted. They are issuing the shares at a discount. So with the discount, it is not allowed. First of all, there will be two ending scenarios for this. The shareholder will have to pay the remaining amount, and key thing is he will also have to pay the interest. Now, this is the distinguishing part. Here also he has made a partial payment, but he has agreed that whenever company wants, he will pay. But here in this case, he is getting it at a discount. In the first case, there is only partial payment, no discount. But in the second case, there is a discount. And whenever there is a discount, not only the remaining amount is to be paid, but in addition to that, interest also has to be paid. Okay, Gus agreed to this. Now, in this case, one may ask that maybe Gus did not know about it. He did not know about the law. A general understanding is that when you start to deal in something, you have to understand its laws. Law will presume that you are aware. Ignorance is not presumed, and neither that is the defense that I did not know. Otherwise, the nothing can be done. If somebody commits a crime, he would say simply that I did not know. So it is reasonable to believe that if somebody is doing something, he knows the relevant laws about that. So Gus agreed to this, but the injection of cash did not say flop, and in December it went into insolvent liquidation, owing considerable amount of money. Now, what is the general rule concerning issue of shares? So premium, if you sell above the par value or nominal value, that is allowed, but that remaining part will go into the reserved accounts that cannot be used to share as dividends. Discount is not allowed, and if there is discount, then the receiving party, the shareholder, will have to pay the amount as well as the interest. So first one is correct. Shares may be issued at a premium to their nominal value, but not at a discount. Second one, what is the extent of Gus's liability on 10,000 £1 share that he paid 75 pence each for? Meaning there is remaining 25 pence per share still due to him. So that cost for £25,000, £2,500, the amount of Gus's unpaid share capital only. Next one, what is extent of Gus's liability on further 10 £1 share on which he had paid 40? Now here it's not just 60 pence per share, it is 60 pence plus the interest. So this is the trick part. We understand this one is not the answer, but here if you do not know the principle, you would go for 6,000. So the legal principle is that he has to pay the remaining amount as well as the interest. Okay. The next question is, Millie Limited has recently entered into the following arrangement with its creditors. These are different types of debentures they have issued. and we need to understand the concept of debentures whenever a single debenture is issued. Multiple debentures are issued for a single asset. So the general idea is we look at the date of creation. First of all, how many combinations could be there? You see, we have fixed and floating charges. An asset could have a fixed and two fixed charges. It can have two floating charges. It can have a fixed charge and a floating charge. That is the possible scenario. And within this scenario, it is possible that date wise, we can go date wise. So one is created first and second, the other is created second. One is created first, the other is created second. Now, in this case, the only trick is here. In the rest of the question, it's not a difficult one. So for example, if both charges on an asset are fixed, the one that is registered first or created first, technically if there is a problem with the creation date and registration date, if a if a charge has been created but not registered, and during that time another charge is created and that is registered first, so law will take into account that one which has been created first, not the one that is registered first. That which has been registered first and not the one that has been created first. For example, if on an asset charge A bank is created and registered, created on April 1, and while it was not registered as yet, we get from X bank another charge on April 10th. Now, X bank was quick enough and they enforced you and they got it registered on April 15. Whereas charge 1, who was created on April 1, but it got registered on April 20. Now, in this case, whenever there is an issue, charge B, X will have a priority. The reason is that it was registered with the registrar first. So, this is what the creditors do, usually the investment banks, that they enforce or they want to make sure that as soon as the charge is created, it is registered first. So, this trick goes for both of these. Now, in this case, we will see which one was created and registered first. If there is a problem, we'll give priority to the registration. Similar is this case. If the two floating charges, one that was created later will be one that is created and registered first will have the priority. The one which is created and registered later will have a second priority. But for the fixed charge and floating charge, same asset has a fixed charge and a floating charge. The issue is that we do not go with the date of creation. The priority is that of fixed charge. Under general circumstances, the priority is that of a fixed charge, even if it is created later and registered later than the floating charge. The floating charge in this case will only have priority if at the time of creation, fixed charge, you see, there is already a floating charge on the asset, and now you are trying to create a fixed charge. Now, it is the responsibility of the uh, borrower that they inform the fixed charge holder that it already has a floating charge and you will have second priority. If he is not informed, still he will have the first priority. Okay, so with all this, we can just a minute. Okay, all right, let me remove this. All right. Now, with this information, let's discuss. A single debenture of 15,000 from B Bank has a that is secured by a charge over Milli's Limited trade receivables. Millie Limited may deal with trade receivable as it wishes. The charge documentation describes the charge as a fixed asset. It was created on 15th May 2021 and registered on 31st May. So in these cases, we have to consider the dates. Okay. A single debenture 10,000 from C Bank. So it was with the B Bank and this is with the C Bank. That is secured by a fixed charge over Millie Limited's office building. The charge was created on 20th May and registered on 31st May. So these both of these charges are created on different asset. This one was on trade receivables and this one was on office building. The single debenture of 20,000 from Pepper Limited secured on Millie's inventory. A floating charge was created on 3 March and registered on 31st March. A single debenture of 5,000 from Auto Limited that is also secured in Millie's inventory. Now these two are on the same month. A floating charge was created on 10 April and registered on 30th April. So let's first see the question. Which of the following statements concerning the register of debenture of shareholder is correct? Now, register of debenture holders, it is a good practice, but legal, it's not the legal requirement. Just like the register of shareholders or register of directors, this is not a legal requirement because ultimately the uh, registrar has the register where he maintains all the records of a company's charges. Now, in this case, in regards to the fixed charges, which of the following parties charges has priority? Okay. We have the C bank priority. Let's see why. You see, it was created on 15 May and registered on 31st May. Whereas the other one, and its type is tricky, is it says fixed charge and it is on the trade receivable, which can be used, may deal with the trade receivable as it wishes. Okay. Now you see 20th May and 15th May. This is created second and this is created first, and both have been registered on the same day. So there is a tricky position. If we consider the first charge, this one, to be fixed, as the documentation says, then the answer should be B bank. Why is it C bank? The reason is that this is not, the documentation is not the true, the title of the document is not the true identification. The true identification for a charge to be fixed or floating is that the charge holder, uh, the investment bank, or sorry, the creditor, whether they have allowed the borrower to deal with the asset as they see fit. This means that they can trade in that asset as they wish. So we will say that it is a floating charge. If they have restricted the use, then it is a fixed charge. For example, inventory. Generally, we see that inventory is a non-current asset. It comes and goes. And usually when you create a charge, we say it is a floating charge. But if it is specified and the creditor has said that when you sell this inventory, you have to give me the amount, then that becomes a fixed charge. Similarly, for trade receivables, if it is allowed to the borrower that if they receive the receivables are converted into cash, then they can use that cash as they may see fit and pay us on the due date, then that is fine. It is the floating charge. But if the condition is that whenever the trade receivables mature and you have to give them the amount to the creditor, then the same trade receivable, even being non-current assets, that will become the fixed charge. So in this case, even though the title says that it is a fixed charge, but it is in actuality is not a fixed charge. With true identification, when we say that Millie Limited may deal with the trade receivables as they wish, this means that this is not a floating charge, but a fixed charge, but it is a floating charge. Now, if this is a floating charge and the other one is a fixed charge, because it is a fixed charge and office building, nothing else is mentioned. So it is a fixed charge. So within fixed charge and floating charge, the priority is that of the fixed charge. Okay, next one. And also it was talking about fixed charges. Even if for sake of argument, we can say that it is not on the same asset. Still, one is not a fixed charge and it is asking about the fixed charge. Second one, a single debenture. Okay, both are created on the same one, and one is a floating charge and other is also a floating charge. Okay, so this one will be Pepper Limited. Why? Because Pepper, both are on inventory and both are floating charges. Then it goes to the creation. 3rd March is creation and 10th April is creation, and it is registered on 31st March, and after that it was registered. So this way Pepper Limited will have priority. Okay. In this question, let's see. Catch Limited is a small private company. Although there are three members of its board of directors, the actual day to day running of business is left to one of them, Len, who simply reports back to the board of directors on the businesses he has transacted. Len refers himself to be chief executive officer of Catch Limited, although he has never been officially appointed as such. 6 months ago, Len entered into a contract on Catch Limited's behalf with Mo to produce some advertising material for the company. However, Catch Limited did not wish to proceed with the advertising campaign, and the board of directors has refused to pay Mo, claiming that Len did not have any necessary authority to enter into a contract with him. Generally speaking, you see, the concept of agency is applied here. Directors are considered to be the agents. Whatever authority is given to them, the outsiders don't know about that. They are neither required to inquire and study the company's articles to understand which power directors do have or do not have. So therefore, if one is a director, and in this case it has been led to him that he could do the day-to-day business, so it could be inferred that he has in this case an implied authority, even though the express authority is not given if we say that he has not officially been appointed. But from the third party point of view, he has an apparent or ostensible authority. They know him to be a director, so it is the company has held out him to be a director. Therefore, whenever he makes a contract, then it is considered on part of the company. All right. So, which of the following describes a director's express authority? The authority granted by the board of directors. Okay. Now, the authority granted by the director to the director by shareholders, that is implied authority, because they only appoint the directors. What duties they have to do, that is decided by the board of directors. Okay. And secondly, company secretaries, they are below the directors, so they do not give them any authority. And authority granted by the chief executive officer, that is also not true. Board assigns the authority. Which of the following describes the extent of a chief executive's implied authority? Okay. Implied authority is to enter the company into administrative as well as commercial contract. A tip here is that for secretaries, they can only enter into administrative contracts. What is the example? Now, transactions due to which you will you will have some profits, intended profit. For example, buying and selling on behalf, buying of raw material, and making contracts for sale with the customers. That will be considered as a commercial contract. Administrative contract is that, for example, we have to conduct a shareholders meeting, and we do not have enough space, and we book a hotel in which we will conduct our AGM. So that is done by the secretary, and he is authorized to create such contracts. So these are the administrative contracts. So directors are allowed to enter into administrative as well as commercial contracts, but secretaries are only allowed to enter into administrative contracts. Okay. So this is the answer. But to enter company into administrative contracts only, that is for the secretary. The to enter the company into commercial contracts only, no, not only, he can enter into both. And to enter company into contracts up to maximum value that is set by the board, well, that is not the employed authority. It will, when it is set, that it will become express authority. They will have limited is authority. Okay. Now, is Mo entitled to the payment from Catch Limited in respect to the contract entered into Len, and why? Okay. Why? Yes. Mo is entitled to assume that Len has implied authority to enter. Why? Because he knows him to be a director. Why the others are not correct? No, Len did not have authority to enter into it. That's a very vague one. No reason is given. No. Mo should have checked whether Len had authority. No. As long as the outside party knows them to be a director, that is enough. Acquiring the details and checking the articles or minutes of board meeting, whether he has or not authority, is neither practical nor legally required. Yes, Len had express authority to enter. No, he did not have express authority, because this statement tells us, although that he was not officially appointed, he did have implied authority, but not the actual express authority. Okay, I hope that this was a session which you would have learned how to apply the knowledge onto the tricks. onto the questions at hand in the paper, and a few tricks in that as well. So I hope this was a good session. Stay tuned for the next one. See you. Take care. Goodbye.